Good afternoon, ladies and gentlemen. Welcome to the webinar series of Cyberport Venture Capital Forum 2020, which will discuss virtual platform as the new normal of fundraising and digital asset investment. This session will offer new perspectives into fundraising and investment during the pandemic. Where's tech venturing ahead amid COVID-19 and trade tensions? How can virtual platforms mitigate deal sourcing challenges and broaden investment opportunities in the new normal? To shed some light on these questions, we are delighted to have Mr. Eric Chen, Chief Public Mission Officer of Cyberport, to moderate this session. If you have any questions to raise up, please type them into the Q&A box and we will answer them at the Q&A session. Now, without further ado, we will turn the time over to Eric. Eric, please.
Thank you, and good afternoon, everyone. Well, we're going to have around, kind of an hour, panel. So this panel is actually a mini CVCF series that is drumming up to the actual thing. So let me just do this little promotions that our annual flagship event, the Cyberport Venture Capital Forum, will be held in early November, the 3rd and 4th of November. And this particular panel is actually a mini series that we are drumming up to the actual thing. So today we'll have 45 minutes of panel discussions, followed by 10 to 15 minutes of question and answers. So let me just probably give a brief introduction of how we organize this. The panel will be divided into two parts, right? Roughly 20 minutes each part. The first part will be on fundraising and virtual funding platform. Second part on digital asset investment. So around 20 minutes each part. And we are very delighted to have a very good lineup of panelists today. Let me give you a brief introduction. First of all, we have Mr. Johnson Chen, the founder and CEO of CABridge. CABridge provides primary capital raising and secondary trading in an integrated and SaaS plus regulated approach. Most funding avenues focus on early stage and post-listing, whereas CABridge focuses on mid to late stage growth company. For example, pre-IPO and pre-IPO, right? So next to me, we have Karina Delnin, the co-founder of Angel Hub. Angel Hub is the first SFC licensed startup investment platform for professional investors. And they democratize fundraising by combining the professionalism of VCs, flexibility of angel investing, and the power of key strategic partnerships. And they make highly vetted global startups accessible to professional investors. And also joining us from Zoom, we have Adrian Lai, the CEO of Liquidity. And Liquidity is a venture-backed technology solution that helps financial institutions innovate with blockchain technology and tokenization. And the company has presence in Hong Kong, China, and Dubai. And on my further left, Dr. Xieben Wang, the co-founder and chief business officer of HKBitX. It is a leading digital asset exchange headquartered in Hong Kong, and is committed to providing a compliant and regulated digital asset, spot trading, and over-the-counter trading platform for global professional investors. So I look forward to a very dynamic dialogue with all of you. So without further ado, I'll get right into it, right? So the first part, we could talk about virtual funding, and let me turn to Karina and Johnson, from Zoom. So this is a question for you both. We are trying to look at how this tech venturing is headed amidst the COVID-19 and the trade tension. So let me just get started by getting your views on how has actually COVID impacted the market development and funding outlook for technology in Southeast Asia, and possibly your view on how it's impacting Hong Kong startup ecosystem, and where you see the opportunities amidst all the challenges. So Karina?
You want me to go first? Great, thank you very much. And first of all, thank you. It's a great pleasure to be here. It's interesting the way you raised the question, because very often, you know, these days we get asked that there are actually arguably three elements that are really impacting the business environment today. So there are the US-China trade tensions, there is, you know, the global pandemic, COVID, and then there have been already over the past, right here, particularly in Hong Kong, you know, social unrest, and now the new security law that was put in place. And the question is obviously, how does that impact the overall startup scene as well as the investment scene? Now, I would argue two of these effects are global effects. They're not Hong Kong specific, right? The US-China trade war and COVID. And I'll put aside, you know, obviously all the humanitarian crisis that it triggers, but in terms of business and business opportunity, it reflects, you know, nothing as a good crisis to really help create opportunities. And if we look into, you know, different sectors are obviously impacted in different ways. But if we see that, you know, some of behavior change of consumers and businesses normally take a lot of time, right? Or a lot of marketing dollars, these now are accelerated through the pandemic. So, for example, very concretely, you know, we have been actively looking in the gaming sector where now every day is a Sunday, right? Where really obviously the traction of, you know, this industry is increasing significantly. So I think with very often when you start asking questions about the overall fundraising scene, there is no one size fits all answer, but there are examples where some of these sectors are really benefiting. Another example is a prop tech company where we're really currently, you know, vetting, where we can see that, you know, they had plans to expand into 7 different countries over the next 2 years, and they will be able to achieve that in 2 months rather than 2 years. Right. So I think, again, a lot of, you know, opportunities, obviously, that this faces. What we particularly see, just to round up the question, in a global context, I'm not sure how many people are calling in from overseas, is we can clearly see now also a polarization, right, in terms of East and West, which again shows a lot of opportunities, because investors also understand it's not enough to only look into the US or only, you know, look into one market, but you probably need to diversify your portfolio also now regionally and geographically.
All right, so Johnson, could you comment on that as well?
Yes, thanks very much, Eric, and great to be here. And yeah, I just wanted to add to Karina's point, right? So for CapBridge, we have actually 2 parts of the business. So we have the first part, which is investment syndication platform, whereby we help, like you mentioned, the pre-IPO and pre-IPO company raise funds from the institutions, the family offices, and we have a relationship with the private banks and all to actually effect this through investor matching. Then the second part we have is the secondary trading. So we have a RMO license exchange by the MAS, and as backed by the SGX here in Singapore. So coming back to Karina's point, I think towards the late Q4, when the virus just starting to happen, we have seen in Q1 and Q2 that most of the funds and the institutional have actually held back. And you know, they have the view that obviously it's still very uncertain, and they're waiting for valuations to drop. Having said that, in the Q3, what we have seen now is that the activity is actually picking up. So we have seen much more interest and capital matching towards the Q3, which indicates to me that I think people are now coming back. You know, they are still pretty selective in terms of looking at opportunistic or the adjacent type of investment that makes sense to their fund. So, you know, the COVID pandemic thing, you know, one of the things is obvious that it has definitely increased the digitization speed. We have seen plays like the e-commerce side, you know, the healthcare investments. And you know, for us being born in the cloud, we've always designed our process to be truly digital. So we're also pleased to say that, you know, just last month we did our first fully digital cross-border digital IPO listing. So you know, we did a whole fundraise, the direct listing, you know, without even meeting. So this was for a Malaysian company that we did it fully digital. So I probably see this evolving. All these digital fundraising tools would be probably the new norm. We have seen, and people have made a lot of reports about the CEO doing a road show on purely on Zoom from his children's bedroom, and I think this is probably going to be one of those trends. And in terms of the whole digital infrastructure, the blockchain, which is the panel discussion today, I am definitely seeing this, and the take up and also the more cross-border working together, because the markets themselves are no longer on its own, and we do have to partner up and increase the ecosystem.
So Johnson, you brought up the idea about this new tech sectors because of COVID, the pandemic, things like e-commerce, because we have to work from home, right? And then there's all this healthcare, remote work solution, logistics, supply chain. So are these tech sectors passing fads only, or are they here to stay? So Johnson, could you comment on that? And later on, Karina, please.
Okay. So thanks for the question again. And I think the way that we've been seeing this is that there's always going to be very key trends that it's there for the long term. And I think the pandemic didn't create this. It just basically accelerated the whole process. So, for us, our investor base has always been looking for, the digital theme, that has always been going on. There's always the food security, the sustainability, and healthcare, as we said, is always ongoing theme that the investors are always looking for, particularly in my sector, whereby most of the investors are after the late stage growth, kind of a pre-IPO type of investment product. So I would probably say that the pandemic has accelerated things. It is like what Karina said, some of it is getting polarized. I think the key theme about the digitization is probably here to stay, and the polarization is quite obvious in the in geographic sectors whereby they are more advanced in the digital journey versus those that are not so advanced yet. So I think probably we will be seeing one of those polarized state whereby there are investment money going into the the people who are already at the companies who are already at the forefront, and we're seeing investment money going into companies which have a big growth potential because of the fact that they are not quite there yet. So these are the two whereby, like what Karina is saying, it is increasingly getting polarized because of the way that the pandemic have driven the way investments and the whole economy is going.
So Karina, any further comments from the global perspective?
Yeah, absolutely. And I think I just want to dig a little bit deeper also in that statement in terms of our certain changes here to stay, right? I would say yes. I think we're behind saying that when we will get back to the old normal, we will be going maybe back to a new normal, right? Mm-hmm. And I think talking about polarization, we talked about geographical polarization, right? But I think I would also dig a little bit deeper what Johnson mentioned as well. I think we can see from an investor appetite as well as also obviously from a company, like two different buckets. So there is the one type that is now really, given the fact that companies are very agile, are benefiting from behavior change to drive their top line, have been very agile also to adjusting their cost structure, the overall bottom line, right, with a lot of remote working tools, expansion, etc. So we can see that these companies are definitely here now that can benefit from that new market environment to scale even faster. right? So this is true growth money. And that's a very interesting one to look at, because there, from an investor point of view as well, I think there it's obviously very beneficial, to work with, platforms or intermediaries such as ours, because we have seen these companies grow over the past, and we have seen their business model, and arguably the validation of their business model is now just faster. And interestingly, there is the second type of companies, which is maybe still more in that, trying to adjust and is raising, bridge rounds. So obviously here we're fully in a buyer's market, right? So I think Johnson mentioned a little bit as well, is you can wait 1 or 2 more months to see how are these companies adapting, or how are, changes really here that are lasting to stay or not. And so obviously there, companies come and have, obviously more interest in fundraising. I mean, from the pure fundraising and startup application side, we have, the numbers go in more than 10 times fold in terms of applications, right? But also there, it's obviously interesting to understand, and for us on the vetting side, it's arguably once again a little bit of blessing in disguise, because you can see if these business model and the agility of the team are there to really drive the company to the next stage. I mean, compared to Johnson, 80% of our deal flow is pre-series AA. We do, since as you mentioned, have also a mission to democratize access to fundraising for high net worth individuals or family offices who typically do not, invest in this asset class. We do have about 20% Series C on beyond, where we still, have access, because we follow on these companies for a long time and can provide that, again, in terms of diversification. But I think that's really interesting if we look into, market trends. And then to your point, I mean, also again, in terms of we're sector agnostic and technology agnostic, but some of the companies right now that are really, really, getting traction also on the platform are in the food tech, health tech. That was already trendy before, is now becoming more and more important. I mentioned prop tech, education tech. EduTech is again something where arguably the pandemic is a blessing in disguise, because everybody now needs the iPads, the desktops, etc., to provide and consume learning. I mentioned prop tech, gaming, e-commerce, absolutely. So definitely, I think there is no more back to the old normal. There is a new normal now.
So let me, have a follow-on question with Karina, because let's go straight to the $1 million question. It's really about fundraising.
Yeah.
Because it's so important to startups. So can you share with us how can startup actually leverage your platform, especially in the market entry and to tackle the regulatory barriers, for fintech companies to go global?
Right. So, I mean, we say, we solve the problem of time, access, and know-how, not only for the startups, but, also for the investors. And again, to your point, fundraising is still a very long and daunting process. There are a lot of myths out there, but on average, it still takes 9 to 12 months for a company, particularly at a pre-AA stage, to raise funds. And time that they waste instead of doing what they do best is building their company and scaling it, right? So definitely, for us, streamlining this process into a 3-month process max, helping with know-how when it comes to different, tools or instruments, be it straight equity, be it convertible notes, saves, etc. So we're there, and obviously access, finding the investors, not only in the right industry, but also in the right stage, and obviously already, dissociating from those who are just pretending to wanting to invest, to be able to kind of get a little bit entertained. There was a specific question, and it's interesting. I always love to mention before I answer the question about scaling, because that same problem exists for investors and for investors who have not yet looked into startup fundraising and startup as an asset class. So that time, access, and know-how issue, particularly if you are not institutional money and you don't do that as a full-time job, it still takes about 7 to 100 hours of due diligence, pure vetting. And again, being able to work with partners such as us, where we know the companies arguably over months and years. So that's the time and access that we can provide that you could not if you would start that off as a hobby now, or as an interest for investing. I think there was an underlying question as well in terms of helping companies to scale overseas, right? And obviously, when we talk about fintech, the regulatory framework is something that you refer to as well, right? For companies, and it's interesting and important to say that we do not only fund Hong Kong headquartered companies, but any company that is interested in scaling into Asia. Not an Israeli company that would go to the US. But, for example, we do right now have an Israeli company that is trying to expand here to Asia, or has already expanded and is raising growth capital. So to your point, I mean, that is something that is very, very key. And And that's where, when we say with Angel Hub, we leverage our networks of partners. One of the major partners is the sister company W Hub that provides soft landing services into other markets, and also connections to contact points or regulators that would help ease market entry. But it's good that you mentioned that. Again, I think expansion is arguably a full panel topic in itself,
yeah.
But I think that's very often important to highlight.
Okay, thank you, Karina. And let me direct a specific question to Johnson. So can you elaborate a little bit about how does their platform works, integrating primary syndication and secondary trading approach, and how actually coverage help growth stage companies in capital access, for example, direct listing, private exchange, or exit? Please, Johnson.
Yep, thanks for that. So when we started CapBridge, we actually went to kind of rethink, how to better build the private markets. And in the private markets, the classic question is that where is my exit? Where is the exit? So we thought through that, and what we did was that we actually combined the primary syndication platform with our secondary trading facility. So as mentioned, we really have two parts of the business, and it works hand in hand. And the ability to offer partial liquidity to the incoming investor, it's a very huge draw and a nice differentiator. So in terms of helping company raise funds, we use the various tools in the private markets to actually try to effect this. So very similar to some of the other panelists here. We are able to offer different types of structures. Say for example, redemption fee features or dividend payouts, in order to kind of have an instrument that makes sense both to the issuer and to the investor. And having the ability to trade this in our exchange also adds to the attractiveness of the product. In addition, the whole point was to actually to fractionize this. So we have various ways to actually make this into smaller ticket sizes and all, which also helps the whole process. And this is really built on top of our our core platform, which is basically an investment syndication, online investment syndication platform, whereby we have a comprehensive enterprise-grade data room. We have a global NDA to reduce all the pain points. So all these are very interesting tools to kind of compress the time, and to help in terms of the information sharing, and in terms of helping the speed of closure, and more importantly, allowing this to access a wider reach. And so we designed the whole process, as mentioned, to be fully digital. We designed it to be global from day one. I mean, our name CapBridge is Capital Bridge, right? So we're trying to first focus on where it makes sense, and where we're seeing is that this public and private market side, whereby there is this integration, and that asset class is what we're focusing on. Eric, you asked about the direct listings and all. For us, we also see this as an additional avenue for startup companies, and especially in Asia, family-owned businesses. So in Asia, there's a lot of family-owned businesses. They also need for themselves as business owners, they need capital raising solutions. They also need capital market solutions. So one of the things that's always a classic one is cap table realignment. So for venture-backed companies, there's always early investor who want to sell out. So that's what we can offer on one exchange. At the same time, we also have been approached by family-owned businesses. There's always sometimes a family feud, or they have a troublemaker brother and cousins. So we have also a mechanism to allow them to kind of do reshuffling and realign their stakeholdings ahead of a public IPO. So we work hand in hand with the exchanges. We see ourselves as a green lane, partial liquidity stepping stone before a formal IPO. And through the direct listing process, we can enable ESOP trading, PSS trading, and so on and so forth. Cap table realignment, and also raise financing. So what we're trying to do is that we're trying to bring all these innovative private market solution to these the private market space ahead of an IPO, and layering that on with the ability to raise financing through our broad-based platform.
Yeah. Okay, thank you, Johnson. Well, let's change gear a little bit and welcome back, kind of Adrian and Shevin, who have been waiting for a long time. Well, we've heard a lot of promises about tokenizations, all these new trends about digital assets and the promises of blockchain technology. I want to hear from you guys, the experts, in your own words, what do you see, the asset tokenization is going, where is it heading, and what blockchain is going to bring, to probably the next, generations that you see is coming. Yeah, can we have Shevin first?
Okay, thank you, Eric. Yeah, everybody talking about the tokenization, but to me, yes, of course, the trend in the coming years, I think about tokenization is the first one is, of course, we tokenize everything. It's not joking, but actually we see. I'm looking forward to see many, new classes of the asset token to come in the market. And many people talking about what's the tokenization to transfer the real economy, but what we have seen in the past few years, even the very hot topic about DeFi, it's only happened in the crypto world. It's not the real world. Yes, actually, we are going to see many assets coming to the market with a real asset to back the real professional to support, including every professional, including legal support and accounting support to involved in the project. Also, we were looking forward to see very advanced protocol regulation to support all the participants in the market. In this way, and also we need very regulated the trading platform to support the whole market as a infrastructure to everyone. And also about the technology blockchain, and I think blockchain is now the standalone technology. I think in the future the technology must be combined with other technique like cloud computing, also maybe the artificial intelligence to support the market as blockchain as a service to really lower the threshold for everyone, every company, no matter it's a small business or the big business, to step into the blockchain to really adoption for the security token and also the blockchain technique.
Mm-hmm. Thank you.
Yeah.
So Adrian, you've been helping a lot of overseas companies digitizing a lot of things. So what's your view?
So my company Liquidity have been in the tokenization space for close to 2 years. So I have been through all the wave of tokenization and all the hype as well. Initially, tokenization is being defined as having fractional ownership that retail or more professional investors could participate in the offerings. But from time to time, I realized that it's not about technologies. Technologies won't change with appetite of any individuals. So whether you use blockchain, whether you use a crowdfunding platform, if someone just doesn't want to invest in that asset class because of risk appetite, tokenization doesn't help at all. So then when the companies and the industries evolve, people put different definitions around tokenization. And during the virus time in this 6 months, a lot of banks, a lot of asset managers are discussing around how the cap table management mentioned by Johnson could be a fundamental base layer for tokenization, transfer ownership, automating corporate actions to happen for not just asset class like startups, but more of VC funds, private equities, even from mutual fund, money market funds, etc. with tokenization technologies offered by companies like us. So I think that a lot of people miss out in terms of when you talk about liquidity, whether it's a trading platform, whether it is buying back from the issuer. I personally don't believe in exchange anymore. So we have a strong discussion before around trading platform for any tokenized asset. And then again, I think to trade that asset or to buy in that asset is always about risk appetite. It's not just about the assets. So when you don't want to buy that as a retailer, you just won't. So for me, liquidity also comes in by issuer offering liquidity to buy that certain kind of asset. So for example, if you tokenize a real estate by a developer, offer the exposure to professional investors, that liquidity could be created by individuals trading among each other. It could also be provided by the developers themselves to buy from the market and from time to time release back the liquidity to the market. Similar for a developer to be a market maker themselves in a stock market setting. So that's my perception on tokenization. In terms of blockchain technologies, I think people just go too far for having it as a next internet. It's not. It's just a base layer to protect data, and you could run innovative smart contracts on that, but most of the case studies we see don't require blockchain. So even some of the clients, to be honest, they shouldn't be using blockchain. But then obviously it's a buzzword. I think it takes a while before people realize that blockchain is not the fancy technology. It's just a core layer for every technologies to run on, whether it's robo advisors, whether it's AI, and ultimately people should then be talking about blockchain when it becomes a core.
Okay. Thanks, Adrian. So Xiebing, I mean, Adrian has a very clear, kind of view about not believing in the exchange anymore. But then, do you see this kind of tokenized asset platform could actually complement and bridge the gap between traditional trading markets and the token economy?
Oh yes, actually, in the past few years, many people think blockchain is a magic, but yes, I don't believe that. I talk something about what happened in the DeFi market. I mean, even DeFi is still to transfer some, the economic model from the traditional market to the crypto market. Actually, I think I heard some big project in market already introduce some real assets, like a maker to introduce some real estate to as a collateral in the ecosystem. But I think that's not enough. Yes, I think there's many reasons to support why the two worlds are still not coming together. I think first of all, there's no the standard accounting system for the both of the two worlds, and the number two is no the very stable coin to support the two worlds. Just like you see many countries developing the CBDC. I think after that, I think even the real world and also the crypto market are using the same currency. I think it should be a very big breakthrough. Yeah.
Okay, thanks. So Adrian, I know that you have done a lot of projects, in places like Dubai and even UK. But then, can you share us a little bit about the tokenization landscape in Asia, to be specific? Because I mean, we want to know that what kind of opportunities in this region.
Yeah. So I think tokenization in Asia, besides the technology, go back to the mentality of whether it's family office or individuals in Asia versus US. So US, I always define tokenization, you're thinking from a fundraising perspective, as basically a blockchain-based deal syndicate. So all Asian people always follow lead investors, whether it's a startup, investing in VC, investing in a particular pre-IPO or any type of special investment vehicles. They need the lead investors there. Say, for example, with a company like BlackRock investing in particular startup, remaining 50% to be invested by tons of individuals. So that is a deal syndicate that happened 20 years ago. And now tokenization in Asia is moving to the next step, basically how you could automate the deal syndicate to run, to attract interest from an assets point of view, to automate the issuers in terms of fundraising, digital signatures, or in terms of distributing the equity right or certain right to the investors. So I think that in Asia, people are very confused of what is the real need from both the issuer point of view and both from the investor point of view. Even for me, myself, I've been this space for 2 years. I can't figure out what investors want and what issuers want. The demand comes in day to day, and we receive huge demand from institutions as well. But that one clear point, but that is definite, is my feeling is echo on some of the speakers saying Asia is the space for tokenization and is ahead than US and Europe, all because of one thing. It's because of DCEP. So launching in China, crypto economy and tokenization and blockchain technology ultimately have to converge. If without a digital currency to be a settlement currency for any applications in tokenization, it doesn't work. So ultimately, if you have a Hong Kong dollar, a US dollar with a settlement layer on blockchain, it just doesn't work because everything has to go digital. So once DCP is launched in China, Asia is going to lead the way for tokenization, many years ahead of US. Obviously, regulations come into place, and Hong Kong is very pioneer, Singapore is very pioneer. But then ultimately, it just goes to trading platforms, which I don't think it will be the major wave of tokenization coming in the future.
And Adrian, could you comment a little bit about how tokenization actually help liquidate, assets such as real estate and others?
So they all start from being a cap table. That cap table could be a startup cap table. If it's a bond registrar. So I think MAS and SGX last week announced a digital bond, something similar to putting a bond registrar on a blockchain. It could be a VC fund being the fund registrar on the blockchain. So once the registrar is being digitized on a blockchain, you could run with smart contracts a lot of different applications, whether it could be as complex as buyback from the market. It could be stock split for any digitized shares or shares per se for private companies or VC fund shares. So tokenization is just a broad definitions for smart contracts to be run on a digitized register of members. So give an example from an institutional point of view. It doesn't have to come with a trading platform. So for example, if you buy a mutual fund through an intermediary bank, you go to Citibank for a BlackRock fund, you need T+4 for subscription and redemption. So if I want to sell my US fund today and I want to buy back, I want to buy an Asian fund, I need 4 days because there's settlement time. Tokenization applies here. Once I could run both funds registrar on the blockchain, I could do instant transfer and settlement. And nothing comes into place with a trading platform here. Liquidity comes in with tokenization as a technology to allow instant transfer between two funds for an individual. So I think that's the future. That's the future for any institution to apply tokenization to make everything liquid, with liquidity either provided by the institution themselves, but not with exchange, which is quite, I just think some of the assets are not meant to be for retail.
Thank you. So Shiving, I want to get a little bit technical while you're here, right? So can you try to explain how does the SFC licensing on the virtual asset trading could actually accelerate your development of virtual asset trading platform and market expansion?
Oh yes, actually we see the end of last month with Hong Kong SFC has made a very good move about the licensing is to give approval in principle to another company, our the similar like ours, the same function in the market, type 1 plus type 7. I think it's really a big breakthrough because there's so many licenses in the world, but I think Hong Kong license the first time to just combine the crypto trading to the traditional SFC regulation system. Plus one, of course, everybody know that is dealing security, and the type 7 is automatic trading system. I think it's a very good news to China, to Hong Kong, to Asia. Just I totally agree that what Adrian just mentioned, the DCP is a very leading way to the whole market. Also, the second thing is the exchange license. I think it's totally encourage the institutional investors in the market. They will have more confidence to trade in a regulated exchange. Also, it also the same thing. Our company, Hong Kong BTEX, put every minute to building up in the past 2 years. Everything about the related to the regulation about AML, KYC, and also market surveillance. Not just in in the blockchain, but also in the fiat money channel. So yeah, I think it's really good news to us, and also a very big signal to all of one in the market. Yeah.
So Adrian, what do you see, in terms of the trend of equity crowdfunding and all these different models, and possibly can you predict the fundraising journeys of startup in the future?
Equity crowdfunding. So Liquidify itself is a startup, but we never tokenize our shares as well, because I think there could be a lot of interest in US that individuals are very keen to invest in startup shares. But I think that is US shares to be sold in Asia for a particular, not startups, but unicorns like SpaceX, or just 3 months ago, TikTok was super popular as well. There will be a lot of interest to invest in those shares, whether it's from family office or individuals if they have a chance. But vice versa, Asian companies to be sold in US, I see a lot of interest as well. But ultimately, I think investing in startups has been a very billionaires game, multi-billionaires, whether it's about the assets or just naturally retail shouldn't be investing in startup, because no matter how much demand is, no matter how much supply of the startups there, I think it's just difficult to project the financials for startups. So my company just doesn't focus on startup tokenization. But if you're talking about equity, it's interesting that I see a lot of pre-IPOs. There's interest because pre-IPOs is certain, and we have to face the fact that Asians just trading animals. So every family office I talk to, or even professional investors, guess what? In US, people expect a 7 to 8 years timeline. In Asia, it's 1 year. If you invest in pre-IPO more than 1 year, I couldn't get exit, I'll just call a guy and ask why I can't get exit in a year. It's just about the risk appetite and mentality of trading. So tokenizing pre-IPO could be an interesting thing. But once again, the dilemma is if I got a allocation to SpaceX, why I am syndicating it out? I'll just be underwriter, and I will just take all the allocation. So naturally comes into thought is some of the pre-IPOs, if you can get allocations as a syndicate, is naturally not as hot as I would believe it is. It's like I tried to get TikTok allocations 3 months ago, can't, no seller in the market, but now obviously tons of that, and you will choose to syndicate that. And there's always matching a risk appetite. Some of the retailers will want to participate in because they just couldn't have any access to those opportunities. And there's a certainty for late stage investment.
Okay, thanks. I think we are almost out of time for the panel discussion part, because I have promised that I'll leave more time for the Q&As, right? So, and I have actually noticed that we have a number of questions. Well, I have also a lot of questions, but I'll probably give it the priority to those audience, right? So shall we jump into the Q&A sessions, right? So there's interesting questions about, probably addressed to everyone, right? So it asks, what is the typical investment VC make for startups, and what percentage of equity? Is it always for equity or convertible loan stock? So maybe Karina, you can share a bit of your experience.
Yes, so Arvid, that's always the opportunity to say that the startup is the one who decides how many shares for what type of valuation, and obviously it's demand and offer need to match up, right? I think I just wanted to before that actually really build on also what Adrian mentioned. It's a totally different business in assessing early stage companies, right? So I think Adrian, we should probably talk afterwards. There might be opportunities for collaboration, but I'm also very happy to see that you're not venturing out in what we do. But I think it's actually very interesting what you mentioned. I think one of the things, just to build on what you said, it's I think what we understand and realize is that, 7 years you were talking about for an early stage company to be pre-IPO, that time frame actually shortens, right? So again, one of our what we preach is to say, if you have money and you want to have a diversified portfolio, the earlier you can come on board, the better it is, and you will have potentially, not access anymore at later stage deals. But to your point, is it only convertible notes or only equity? No, I mean, what we can say is there are certain instruments that are more popular and better understood, for example, in the US than here in Asia. So obviously straight equity is understood by everyone, but when it comes to convertible notes or to safe notes, very often we still see, particularly for investors who have never considered investing into startups, a lot of misunderstanding. And again, that's where I think our role is there to clarify that a cap is not a valuation and things like that. But arguably, even on our platform, we are not dictating any terms. The terms are terms that the company comes with. When we go through our vetting, obviously, that is part of our decision if we list the deal on the platform or not. And when we list a deal on the platform, we actually co-invest. So we do have a fund alongside the platform that does invest. So startups can use us as a sounding board if we think that the terms will make it or not.
Okay, thanks. Any comments from other panelists?
Yeah, so it's Johnson here. So yeah, Cap, yeah, hi. So yeah, CapBridge is actually my 5th company now, and part of the reasons why I started CapBridge because it's really hard, in the entrepreneurship journey to raise funds and all, and this is really our hope that we can actually facilitate and make the process more efficient. So coming back to the question, there are the private market is quite complex, and as mentioned, there are so many tools and so many ways that you can structure the deals and all. And for us as CapBridge, part of our focus area, coming back to Adrian's things that we have to start somewhere first. We want to kind of systemize and try to make this investment syndication platform work. And then we can probably take the learnings there and try to templatize this in order to kind of bring more structure towards the private markets. I mean, private markets by definition is pretty flexible and all, but at least we can give some guideline, and by linking some form of fractionalization, tradability, of fungibility, at least we can try to move the whole industry and hopefully solve some of the pain points. So this is an ongoing thing. Is really our aspiration to really help to improve this.
Mm-hmm. Thanks. So after this question, this is very relevant to the theme of our CVCF last year. Because last year, the theme was, we're seeing the slowing down of institutional investment into startups. So we brought in this corporate venturing, as a way to kind of fill the gaps, right? So we had a lot of discussion on that. That's really interesting. But now we have a question asking, will virtual fundraising platforms become more prevalent for startups after the pandemic? As it is difficult to get funding, during the pandemic, from the traditional ways of face-to-face pitching, the traditional institutional investors, right? So could you comment on that?
Yeah, actually, after this year, I think many things changed. Yeah, we talk about that, but about the other price to funding, especially for the startup, I think maybe it's a good thing because there's a good example in today's the performance. I mean, the secondary stock performance about the Zoom, the DocSign, something like this. It's really give us kind of examples of how to transform your company, especially while you start out in the period. We talk about how to choose between the share funding and also the bond funding. Also, I think the two questions is kind of related. I think thank God we have the blockchain, we have technology. I think it's a good way to really getting good use of them. I think by technology, we can reach people online. I think maybe is we can reach people who maybe we not possible to meet face by face, maybe in the last year or in the early days. And also, I think using technology online to tell the story maybe the best way in this such a special period. Really, submit to copy and to tell the story why you can realize the picture.
Mm-hmm. So that's an interesting question that they want to ask your opinion about your view on platform like Republic. Karina, you want to comment on that?
Yeah, well, actually, just to mention before what you said, in terms of, equity crowdfunding platforms, I mean, the value proposition was already out there and very, very clear. And I think some elements, thanks to, again, or due to the pandemic, are just becoming much clearer. So particularly if you start investing into pre-AA, the vetting the team on top of, the business model, and, very often, obviously, financials may only cover 1 year or 2 years, right? Becomes way more important. And then again, our mantra has always been, to invest in startups together, not only together in terms of, having the crowd invest, and crowd as defined of professional investors, but really also through our partners. So we are backed actually by later stage family offices and PEs, because they want to have access to an early deal flow, right? And also, for us, being able to have a deal flow that comes pre-vetted from trusted partners, acceleration programs, or VCs, where we only take a tranche, for example, one. We don't have to lead the rounds, right? So again, a very inclusive approach. Then for you as an investor, because you cannot meet the teams face to face, but then having us as an intermediary who arguably already knows the teams or have pre-vetted them, just makes the value proposition even so much clearer. And obviously for the startups, I've already mentioned that, right? It's in terms of really having access to partners. On the other hand, the investors that are vetted, so to speak, just becomes way clearer and way more important. But arguably, the value proposition and the advantages were always there.
So I have to ask this. Someone actually probably asked it for me, because it's about, what do you see the opportunity and challenges for intermediaries, such as incubators or accelerators, to use virtual funding platform to raise funding for a portfolio of startups. That's a very interesting, concept. Anyone want to comment on that?
Yeah, we're talking about the platform. Actually, I think we're taking different function in the market. To myself, I think we talk about the blockchain and technology to trace I think kind of to get rid of the intermediary function in the market, but actually we're taking some monitoring function in the market. Maybe it's not happening in the past, but now we were taking some responsibility to civilians, whether to keep the investor, to keep smart, to really picky and from the kind of worthless or fraudulent the project. I think it's a good thing we can learn from the blockchain, but also it's the new responsibility to the market give to us.
Very short answer.
Yeah,
actually,
sure,
that's
please.
why we have the platform and the fund.
Exactly.
So some people love to pick and choose by themselves, and some people just like, okay, we'll trust your diversification. So
yeah. And definitely, this is one of our main jobs. At Cyberport, we helped our startups to find the right investors, to help them scale up. And definitely, it's something that we should be looking into as well, using these kind of platforms to help our startups, on the scale up journey. Right?
Yeah.
So I've got some specific questions, for Adrian. It asks about how Liquify fill the gap in the market, especially investment management processes. Adrian, you want to comment on that?
Great, thanks. So the company start off by dealing with specific asset owners to tokenize the asset, whether it's real estate developers or funds. Actually, we are announcing one VC fund tokenization next week. But then, since we develop our technology platform and also our expertise in this space, we're starting to do more customized case studies for banks and asset managers, whether for a fund to be issued on a platform and as I mentioned, to allow fund being able to transfer from one to another for individuals. That is more a liquidity provided to individuals to when they invest in a mutual fund, money market fund, or even a private equity like a closed-end fund. Obviously, the after issuance or the after issuance processes such as whether it is the redemption subscription of the fund being more effective because of the settlement time streamlined with blockchain technology is one thing that we do and offer our technology as well. So meaning that Liquify, obviously from a branding perspective, people think we just issue tokens for a particular asset, but it's not true. And is something that we have to work on for our branding. We actually now being an institutional solution for them to streamline everything from the issuance of the fund to the fund administrator that they could, which we will also work with the fund administrator, and ultimately allow liquidity to be created by having the fund transfer being streamlined. So that's sort of, if you want to know more about that, feel free to reach out as well. We will have we have a more comprehensive presentation deck on that.
Okay, thanks. So we have a question about, we talk about the government centralized control digital currency, right? And such as the DCEP. So it asks about, is there any current decentralized digital currency that you anticipate would become successful? Maybe an investment advisor. Anyone want to comment on that?
Well, probably I could go first. If you're saying about centralized digital currency, I guess it's the more currency either issued by banks or issued by institutions. So there's tons of that in the market. It could be something issued by Facebook, which they claim to be decentralized, but actually quite centralized. So I think that the success of a digital currency, whether it's a sovereign one or a consortium one or a company-specific one, the success is all related to regulations or politics. So like Facebook, it couldn't be adopted or being scaled in the market just because the Senate and the White House just doesn't like it to be in the market. And DCEP will be so successful because it's anchored by the government, anchored by the banks, and has to be the default currencies and basically is the M0 and M1 in the money supply for China. And even WeChat Pay is actually M3. So that will be very successful. But you're thinking about more centralized digital currency, Bitcoin is not one of them, but if a decentralized digital currency like Bitcoin, whether it'll be successful, I think it is a totally different story. Digital currency is now is a two world. One is the Bitcoin world, another world is the sovereign digital currency world, which is honestly don't require blockchain, but you just use a blockchain for the sake of using a blockchain.
And I
So,
think
hi.
Panelists, kind of share your view on what are the best practices and tips for using virtual fundraising platform from experience.
Well, I mean, arguably one of our roles as we see it is to be a guardian of best practices on, both sides, because again, I cannot stress enough also, for the startups who are listening, it's really, it should be a fair contract between those startups and investors, right? Because that's only how it's going to work in the long term. And we see ourselves really aligning the interests on both sides. I think, again, on the platforms, what they do is they provide you with visibility on what they believe these best practices are. So I think it's interesting, we talked about also the advantage of leveraging crowdfunding platforms for companies that are in acceleration programs. I think in more mature markets like in the UK, startups would always try to leverage crowdfunding platforms even at a later stage. And we even hear stories from companies that are listed that are still going back because they can basically democratize their investor base and making their customers becoming their investors and shareholders. And it's really interesting to look at that even from an angle, again, in terms of you as a company or as a startup. If you can have your customers become your shareholders and your shareholders your customers and further support they love your product, they purchase your product, they drive your growth, and at the same time they benefit with you, I think is really brilliant. And I think, again, for startups out there, or even for investors, look into different geographies, allow different type of crowdfunding. So some geographies allow true retail crowdfunding, and some actually, like Hong Kong here, only for professional investors.
Any other views?
Yeah, hi, it's Johnson here. So maybe I can comment, right? So probably one of the tip I will probably share is the key word is understandability. I think you'll be quite surprised that when we work with the issuers and the company trying to fundraise, most of the time it's actually too many messaging and all. So it's really hard. Sometimes less is more. And it's really hard to actually distill this down into what you're exactly trying to do or trying to solve. So that will probably be my top tip in terms of the understandability and really whittling it down. So that will be my tip. In terms of the best practices, I think platforms such as ourselves, we're always trying to, as Matt mentioned, to templatize things, to put some structure, using digital tools to share and to remove the pain points, like all the digital DocuSign, the NDAs, all these kind of things. So I think this is an iterative process. I think over time, I do believe the virtual fundraising platforms are here to stay, simply because of the power of the platform play in terms of giving a broader reach and the law of large numbers. So there was a question on the ecosystems, and also for us, we are proud incubatee of Hong Kong Cyberport. We're also an incubatee of SG Innovate here in Singapore. These are all government-backed funds, and we really want to build out the ecosystem. We love to work with all the incubators, betas, and the intermediaries, and the financial institution, the private banks, and all. Because end of the day, it's all about the ecosystem, as what some of the other panelists say, is really to build this out so that people have a better visibility, better choices, better decision points in order to help to make these investment decisions and to fundraise. So with that, having this global platform, I mean, this is definitely where we see the future is going. With all these technologies that is coming out, like blockchain and all. Yeah.
Thank you, Johnson. I think we are running out of time. So I would like to thank all the panelists, Karina, Shebin, Adrian, and Johnson, for the fruitful discussions. And I look forward to having you all, to our CVCF in early November. And stay tuned, and we'll broadcast more messages along the way. Thank you very much.
Thank you all for the discussion. May I now invite our speakers to look at the camera and take a group photo together. Okay, 1, 2, 3, cheers. Thank you. And this also marks the end of our webinar. Please scan the QR code and click the link in the chat box to leave us your comments. If you are interested in catching the latest tech venturing trends, join us at Cyberport Venture Capital Forum on the 3rd and 4th of November. This year, CVCF will be held online for the first time. This includes expanding the Innovator Showcase, the Founder Stage, and the Investor Matching Sessions, with month-long engagement activities to generate more opportunities for deal flows, networking, exposure, and collaboration. Scan the QR code and get your digital pass now. See you all there.